Hi guys, this is Mark with an update. This is Thursday the 11th of May. So let's have a look at what went right this week, what went wrong, and the annoyingly frustrating ones that we just missed that went hundreds of pips. So the dollar index, as ever, we keep watching this. We're watching for a breakout. It keeps trying, but it's stuck in this triangle. This suggests a move of 1200 pips, which would take it either down here or below or up, back up to the recent high. So we've been waiting for some energy for a while. There was MACD divergence on a weekly, giving a clue that it was probably going to bounce here, which has been the case so far. It's currently in a range on the daily. MACD divergence again. We need some catalyst to get this going. Now this is gold, and I said to you the other month I was a buyer of gold at 1820, and it came almost to the pip back into here. And that was for multiple reasons. And then I showed you the other week, if you have a look on the daily, this is a triangle pattern. And what that was suggesting, if we had a break, that would be a 850 point move, and it actually did 900, and therefore on that occasion the triangle worked. There was also MACD divergence, which is a clue that gold may be about to drop. If it does, then I will be a buyer lower down. The same for silver. There's MACD divergence once again, and here on the daily it was even steeper. And I also use RSI for metals. This was a triangle here on silver suggesting a move of 167. It did actually break higher, didn't quite get to the limit, but then again it stopped to the pip at the double top. Another technical indicator. Bitcoin is below this major area I have had on here for years. And again, if money is flowing back into the dollar and the banking crisis is supposed to be over, then Bitcoin is going to drift and maybe drop much lower. If it does, I will buy again. Now, if there is a banking crisis, another bank goes, I really expect Bitcoin to have a really big move, and the same with Ethereum. So onto Forex, we can see the US dollar Swissy, the same as the index obviously, is in a range. There was MACD divergence here as well. I was explaining I preferred the Euro USD because we had multiple reasons for the stop up here. I was in this the other day. I have now been taken out today, but this was, I think we had a 50 pip stop here, and the overall target was down here, which is where I also have an order for a long on the way back up again. So that was a better trade than the Swissy because we had more places to hide the stop behind, and it worked 2 or 3 times. Then on the CAD, the frustrating one. Look at this, was the same on my live account as well. It came down after news and it actually touched my entry point, and because of the spread and news it missed, and it's gone 180 pips. And unfortunately it's part of trading. Very frustrating. It happens. You have to learn to move on.com. Pound USD, I preferred the euro of the pound USD because not as many reasons for the stop. And of course today with the pound, it has been all about the pound and interest rates. And what has happened, they have raised the rates to 4.5 as expected. Again, 7 members of the panel voted to raise rates. Nobody voted to reduce them, and 2 voted, as the same as last month and the month before, to hold them where they were. So that's gone through. We've also had PPI news through for the US later in the day, as well as unemployment claims. Now, often when you get a central bank raises rates, and he's talking about possibly doing it again, then that currency will surge. This is the craziness of Forex today. It's dropped, as we've seen. These were some of the notes from the thing today. Governor Bailey, I mean, he was upwardly, he was moved up to this job, having failed so badly at the FCA, equal to Leiden, the leader of the EU. Worst defence minister the Germans ever had. Such is life. Anyway, these are some of the comments. Growth outlook is not less weak, so that's not as bad as all the doom and gloom, but it's not strong. Greater resilience in the economy than we had expected. That's better. So basically, they've got all of it wrong all of the time in the last 18 months, as have all central banks. So back to the currencies. The pound then is dropping on a on the Aussie dollar. We caught this the other day. I didn't take this time. This was the entry I'd flagged on Sunday and said 67.80. The issue with this, well, you stop. In retrospect, it was a good potential trade. I actually took the USDCad again, and we have had multiple winning trades on this, and I'm in it again. This is one where I've split the trade just in case it didn't quite get to my entry. This was my preferred entry, just below 9100. Didn't quite get there, but to avoid a situation like with the CAD, I split the entry in half, and this is now up around 40 pips. So soon I'm going to move the stop to here, just above the recent spikes, to half the risk. And this is something I do all the time. The goal is try to reduce the risk on your open trades. This is the dollar yen. Showed you how I had a winning trade on this last week. This is a massive triangle. This theory goes this should be a 2,500 pip move up or down, and so it's very significant. I was in this last week, made a video for you that's in the members area showing you how I entered it and how I had taken the profit at this point here. This point here, this was after a news surge, and on the 4 hour we had the 55 EMA. We also had some previous resistance going on in the past and the whole number of 135. So I took half off here, and initially normally I would have placed my stop here on the balance, but because I felt that this could be a bigger move, I left it all the way back down here, and unfortunately got taken out earlier in the week. Now I have taken this again, and again I am in at the moment with a 40 pip stop for a potential short-term 1 to 10, that's 1 to 10 risk reward ratio, which is awesome. Now it has moved today in total 110 pips, and the average is 123, so it's probably run out of steam for the day. So what I'm going to do, instead of having a 50 pip stop, I'm going to tuck it in just below the recent low here. So I have now reduced my risk by almost 80%. I now have on this a 10 pip stop as opposed to a 50 pip stop, but I still have the possibility that this could go a long way. It's another trade that I have scaled into on the euro pound. I've got part of the entry up here, part the preferred entry down here, only a small stop on these. Currently the lower one is 70 pips in profit, so I'm going to move my stop to entry, and the other one I'm going to tuck the stop just below this 200 EMA. Other ones, other than that, most of them I am waiting for a bigger move. The only other one that I'm half interested in at the moment is the New Zealand yen. Now technically we've had the break, we've had the pull, we're looking at the pullback now. This has the potential for a 55 pip stop for a 200 pip gain, so 1 to 4 risk reward ratio, 50% fib in here, 200 EMA, 55 EMA, but it's Thursday, it's getting late, I don't trade on a Friday in general, so I'm just going to keep my eye on this one. But again, it has done 115 pips today. If it was to get all the way down here, that would be more than twice the average range, which would be another clue that it would probably bounce here. Okay, I hope that helps. Catch you all later.